When that happens, and it happens impulsively, it leaves behind these imbalances, and these imbalances show that there's momentum. If you factor this in with maybe your weekly bias or your daily bias, using things like the Asian range to be swept, perfect setup is Asian range swept with an ISC candle, manipulation setup, continuation. Okay, that is, my perfect setup, my go-to. I'm looking for that all the time. Traders, it is 2024, and part of my commitment for this year is to make sure that I provide you with bigger and better content than you've ever had from me before, but also better than everything else that's out there. Now, I've just released my brand new course. You're going to see a little advert on that in a minute. I want to keep giving you guys absolute value. Anyway, enough on that. Today, 3 ways to double your profits in 2024. By the end of this video, if you employ these techniques that I'm about to go through with you now, I promise you, you can double your profits. Okay? There's 3 things we're going to talk about today. Number 1 is the Asian range and how to properly use it, because so many people talk about it on YouTube and they don't know actually how to use it. So number 1, the Asian range. Number 2 is a second rejection stop, and I'll talk to you about what this means, but again, really, really useful. And number 3, the biggest and the best part, that I don't even need to trick you into staying to the end because you need to learn about this, is the ISC candle, and I'll explain what that is at the end of the video. So let's get stuck into it. Let's start off with the Asian range. When we've got clearly trending marketplaces, and this is my Asian range, just so you know, these are the settings that I use. So I use a tool called Nico 948 Asian range, and I use it for all of my ranges. So I use it for my London session, I use it for my Frankfurt session, and I use it for my New York session. So I use it for all of them. Okay. So these are the settings that I use specifically for Asia. Okay. And what I'm looking for is in a clear trending marketplace. So we need to make sure that we're moving, in a clear trending fashion. So let's say that, assuming this is going to be kind of Monday time, let's have a look. Yeah, so we've got Tuesday here. Okay, big push up Tuesday. Then we've had a kind of accumulation, manipulation, and we've had our distribution for the rest of the week. Now, when you get into kind of Wednesday, Thursday, Friday, you typically know which direction your market is going. We spoke about AMD the other day. We've got an accumulation here, which is our Tuesday accumulation. We got our manipulation down here, which is our Wednesday to Thursday manipulation. Okay. And we've then got our distribution for the rest of the week. Okay. Pretty simple stuff. We learned that in the last video. When you know where your market is ultimately going, it becomes really, really simple then to use the Asian range. And the problem is with most Asian range strategies is that they teach you to basically trade it all the time, and it's got to be traded at the right time. So kind of back end of the week when I know that we're clearly in an uptrend, okay, Monday gave us this accumulation, then a really big push down, then we had another accumulation, then we had a pullback. This is a bullish marketplace really. So we had a bit of a funky week. It was quite up and down. But when we then seen that we are, clearly pushing bullish, further, we've got ultimately a really high time frame bullish marketplace anyway. When we see this happening, what we can then do is we can then use the Asian range to our advantage. And it's actually really, really simple. Now, the actual way to trade it is probably what you've been taught before, but what I need to get clear is that there's a timing to the Asian range that you need to make sure that you're using. So for us then, we're extending this Asian range out. This blue section here, this is our this is our London open session. Anytime in here I can take a trade based upon my rules. So what I'm going to do is I'm going to mark that on. That's my Asian range. So we're pretty happy that that's there. That's clear. And then I'm going to drop down to a lower time frame. Okay. Let's just find it again. So I'm going to drop down to a lower time frame and I'm going to be looking for an entry. So clear manipulation. We've then had an impulsive move away from that level. We've also taken out some liquidity points here as well, which is obviously, worth acknowledging. So we've got liquidity there, there's liquidity there, but that's a significant one. And then we've had a really nice rejection within a bullish market. And we know we're Thursday by this point. So typically by Thursday, we know that the higher time frame trend will usually continue. Unless we're at like a major swing point, this will usually continue. So it's really, really simple. I'm then looking for my classic entry, which is manipulation on the way up, okay? the MSU setup, and then I'll be looking for an engulfing like that, and then I'm going to place my stop there, and then I'm going to hold all the way to the top. Okay, safe stop will be below here, and a higher time frame stop will be somewhere like this. We've probably got liquidity there to that, so liquidity there to the left. That would be my higher time frame, sorry, that would be my larger move profit target. That would be where I'll be taking out the majority of my trade at that liquidity point. And now I'm well happy. I've completed my day really quickly, and I've got, you know, a nice 4R out of the market. Okay. Now, these are really, really handy to make sure that we are getting into the Asia at the right time, okay? We're now moving into Friday. Very, very similar setup, as you can see. And this is where timing is so important, because had you taken these a little bit earlier, where's my setup there, okay? Had you taken these a little bit earlier, then you might not have got out of it what you needed to. We're probably going to hit a liquidity point there, so we've got a higher there. We've got a nice push up here, another 5R out of that there. Probably had some liquidity over here somewhere. Can't go back that far. But you can see there, we've taken 5R out. I mean, if you held it all the way, you know, you would have got a massive, massive trade out. And then we've even got another one here, as you can see. Okay, this one does reverse on you in the end, but you at least get to the top of Asia. So the important thing with the Asian range is that you're taking it at the right time. If you take it kind of towards the end of the week, okay, this is Thursday again, take it towards the end of the week, you will typically be able to get yourself into much more profitable trades. But I find when the trend is really confirmed, it does usually give you better results. Now on that note, okay, there is an argument to say that when you're placing your stops and using the MSU setup, for example, when you're placing your stops, you know, what you want to be doing is you're placing your stop below previous low, something like that, okay? The problem with that I found is that you often get stopped out if your stop is too tight. Point 2 is the second rejection stop. Now, this is particularly good in more complex pullbacks. So when you've got, you know, a chart that is pulling back, let's try and find one here. Okay, when you've got a chart that's pulling back like this, it's difficult to know where, you know, which liquidity point you're going to push off from, and which ultimately, you know, where you're going to be placing your stop. So you might get in on here and you might get stopped out, okay, because, you know, it pushes back down. Equally then you could take another position down here and then you get stopped out again. So one of the tricks that I've used recently is if I am in a situation where I've got maybe a slightly complex pullback and I'm not 100% sure where we're going to be going long from, is to use a previous rejection. So if I'm taking that trade here like that off the engulfing, I'm going to use to the left a second rejection. Okay, so that pushed up, pushed back down. This one here, however, that's a clear rejection. Okay, it's a clear rejection of a level because it took out highs to the left. And what these will do is, whilst it will widen your stop, it will typically give you a bit of theory to stay into trades for a little bit longer. Here's another example here, back on the 18th of December. So we've got this push up, okay, we've got this pullback, and this is where it starts, you know, it's kind of giving us bullish momentum, but then pulling back, then giving us bullish momentum. When you've got these complex pullbacks, this is the time where we need to be being a little bit safer with our stops. If it's a clear rejection like that, boom, and the first entry goes off, then you're good to go. But even in this scenario, you know, you could place yourself a really tight stop like that, but you do run the risk of getting stopped out. Look at how close you were. So I'll always use that low to the left, even in that situation, because then if it does come down that little bit further, maybe to take out your liquidity, which this example does do, yeah, it takes out your liquidity there. If you've got a really tight stop, you may find yourself stopped out on there. This is a perfect example here, okay? Big push down, push up, push down, push up, push down. Now, in these scenarios where we are pulling back, this is probably about 10:30ish, yeah, okay, so the 10:30 pullback's in effect. As you can see, it's quite common for these areas to be swept. So what I'd always do in this situation is use a second rejection. This is a clear rejection, okay? It works particularly well in a downtrend, because think about it, when you are bearish, your bid and your ask price, your spread will normally stop you out sooner because of the way your broker works. So this works better in a downtrend than in an uptrend. So this is our entry, okay? Typically we've done a really nice stop against that high to the left, but as you would have seen, if you'd done that, you would have been stopped out. So what I'm using in these scenarios is I'm using the second rejection, which is that rejection there, because that's in line with that one, as you can see. And in doing so, I've stayed in my trade. Now, yes, to that low, I've only got one 155, but then we've held down, we've got 5 out of it. But for me, I've stayed in the trade. I've not become opposing liquidity. I've stayed in the trade, and possibly I could have even taken a second entry then after I saw that big engulfing. So that's a really, really great example of what I'm talking about here. That second rejection to the left will save you countless profits. Same scenario here, okay? You've entered like that, okay? Complex pullback, push up, push down, push down. You're not sure where to place your stop. You want to ideally do a nice tight stop, but it doesn't always work that way. So let's use that rejection to the left. We'll hold that one. You could have done that little wick there, or you could have done the top one if you were feeling really risk averse. And what happens? We come back and we test it, but then we push down. So these second rejection areas are really, really handy to get you into trades and keep you in trades. Make sure that you're not giving back your profits for no reason, then having to take a second position for absolutely no reason, okay? Now, the third and final thing that I want to give you guys today, which really is mentorship content more than anything else, but I do talk about it in my stories all the time, is the ISC candle. Let me tell you why your Forex strategy does not work. 95% of all Forex traders fail. This is partly due to the fact that you're rubbish at following basic rules. You all know who you are. But also because 95% of all trading strategies are flawed. My name's Czech. I'm the founder of Strong Money Forex. I've tested almost every strategy in the marketplace, and I've built over the last 8 years a smart, simple, easy to learn system that's taken the best bits from everything out there. Now, I want to reassure you, it is not your fault. Strategies you see online are oversimplified, heavily marketed garbage. The good news is I've spent years working out why so many traders fail, been one of those traders, and I've used those strategies with something that's been under your nose all along. You may even be using it right now and not even realizing how important it is. I'm currently, literally as we speak, building my 2024 mentorship course. As an early bird special, anybody who signs up using that link below will earn themselves lifetime access to my coaching and my mentorship course. A free one-to-one coaching call with me. The best part is at a massively reduced price of just £49. You will never see this course at this price ever again. Now, too many times you get stopped out of trades when you're actually correct and you're moving in the right direction. For example, this area here. What we're looking at here, obviously, is a bearish breakdown. You know that you're going to be bearish because of that level there. What you're looking for ultimately then is a clear indication that you're going to be going short. So you're moving up, pushing away, moving up, pushing away, moving up, pushing away. Now, there's a significant pattern that I'm looking for, which I call the ISC, which is the institutional sweep candle, okay? And what it looks like is a big push up, usually with a wick. It normally doesn't leave more than 1, 2, or 3 candles above the liquidity area. So I'll show you on this chart. That is our ISC here. It only left 1 wick above. On this chart, that is our ISC there because it only left 2 candles and a wick above. And what we're looking for in these key areas is clear rejection. Okay, the wick itself is not enough because you can see you get wicks everywhere. Wick, 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 wick. And this pattern is really, really clear. When you get this pattern, you'll normally have a rejection. Okay, the ISC is formed, you'll have a rejection, and the rejection will leave behind an imbalance, which shows momentum. That's the first key sign. From there, I'm then looking for my MSU setup, which we get there. And then I can place an entry on the engulfing, and using the previous theory in point 2, I'm going to use the rejection candle to the left, and therefore we've got our big move and everything stays and everyone's happy. We've got a second entry here, so we clear out some liquidity there. All this trend line liquidity here gets liquidated as well. Clear ISC candle because it wicks up, pushes down, and then leaves behind an imbalance. And from there then I'm looking for my MSU, which we get here. We draw across our MSU line, which is that one there. And then we're waiting for an engulfing, which we get here. That candle there, as you can see, is our engulfing candle. And then I'm going to be using the second rejection, which is there to the left. And then I'm in the trade. Now, the ISC candle is particularly good at extremes of the ranges. Go back. Let's try and find another one. Okay, you'll see these all over the place now. Okay. Really clear one here. So what we got? We've got Asian range like we spoke about at the start of the video. Asian range has been clearly manipulated. What have we got here then? We have our ISC candle like that. Okay. Then we have our push down imbalance. It's the ISC candle which takes out the liquidity. And once again, 1, 2, 3 candles is all you get outside of the liquidity area. push down, push up, push down. We have our MSU setup in there. Oh, let's take that off. MSU setup is in there. And then we take our engulfing. Terrible line. We take our engulfing, so that's our ISC. We take our engulfing pattern, which would have been there effectively. We use stop to the left. Is there a rejection? Well, we can't see it. Let's say this one. I mean, this one's holds anyway, so great work. If there had been and one thing I will say with those rejection patterns, okay, what I'm talking about here is if you're entering here and the rejection is to the left, immediately to the left, if you've got to look back, you know, a few days to find it, then obviously it's not worth using because it's kind of irrelevant. When we're looking at complex pullbacks like that one, up, down, up, down, up, down, okay, and you're not sure where to get into it, let's say you get in here, what would be an idea is maybe to use that wick to the left because that would be safer. Now, the rejection pattern, point 2, it's not something that you have to use all the time, but if you're finding that you're getting stopped out more regularly, then I would use it, okay? It just makes your stop a bit wider and it uses a bit of theories to understand where to put that wider stop, okay? With this example, we hold down just to London's low, we get that out, we've got a lovely 5R just out of that one trade. Okay, so we've got this bullish move here, okay, that we can see Asia, really bullish Asia, and then pull back, push away, pull back, push away. We've got various liquidity points that are taken. So let's have a look at the liquidity point there. That's been taken. We've got another liquidity point here. Then after we get this kind of impulsive push down, 1, 2, 3 candles below, and then we've got in here an imbalance, which shows us that we've got momentum coming into the marketplace. And we then get this pull back, which again is impulsive. So for me, I'd be staying on my toes, I'd be thinking, do you know what? I'm not 100% sure yet. Let's have a quick look. Then we get another wick below, clearly again taking out that liquidity there. That's a false breaker structure, that one. False breaker structure, then another wick, and then straight after that, we get that impulsive move up. Imbalance left in the middle there. Pull back, push up, pull back, push up, pull back, push up. Manipulation of these internal areas. Oh, wrong line. Manipulation of these internal areas, and now we're just waiting for an engulfing again. So we don't get the engulfing until that one there. Okay, we enter like that. Stop would be there, but we're going to use that candle to the left. Okay, that's our second rejection, and then we hold to the highs for another 5R. So these ISC candles, okay, they'll often come after some form of manipulation. We've got another one in here. So push down, push up, manipulative move there to the left. Okay, wicking out early sellers, push down, impulsive, leaving behind an imbalance. I'll draw on the imbalance so you can see it, leaving behind an imbalance in there. Then we get push down, push up, push down with a manipulation like that. And then we get an engulfing. I'll probably drop down to the 1 minute time frame at this point. So an engulfing in there. Would we use the stop to the left? Well, it's a good job we didn't because it would have been stopped out there. Okay, we used the stop there to the left, and then we could have held down, taking out some profits here. First profits 1, second profits 2. Do we get out? And then we would have been stopped out for break even. Moving back up. Okay, Asia gives us an ISC there. So we've got our ISC candle there. A manipulation of that low. Impulsive move away. Push down, push up, manipulation setup. Okay, and then engulfing. Would have been there. Use the second stop because we can use that one in that example. Hold up to that high. First profits out, second profits out, and then you can hold it all the way up. So use these 3 things in combination with each other. The Asian range should be used at particular times in the week. It's really, really handy, but make sure if you are using the Asian range, you're using things like the ISC candles to show you that there's manipulation. What the ISC does is it shows you that there's been a deliberate move to move in one direction and immediately return. When that happens, and it happens impulsively, it leaves behind these imbalances, and these imbalances show that there's momentum. If you factor this in with maybe your weekly bias or your daily bias, using things like the Asian range to be swept, perfect setup is Asian range swept with an ISC candle, manipulation setup, continuation. Okay, that is my perfect setup, my go-to. I'm looking for that all the time. So thank you for joining, guys. Really appreciate your time. Hope a lot of this is useful. I want you guys to start using this in your trading more and more and more. Pop a comment below if you've been using these methods and let me know how you're getting on with them, and I'll catch you in the next drop. Cheers.